All right, guys, we're gonna see wait to see if other people comes in. So far, it's like four of you guys there. So we just see if anyone else pops in. We're giving a couple more minutes. Give me a thumbs up if you can hear me. Okay. Or tap on the chat, whichever.
Yes, I hear you.
Oh yeah, yeah, it's good. We got some no technical issue today. That's not good.
And yes, yesterday I had a problem. So
Yeah, that's good. So while we waiting for the other people, I'll just share my screen. So show all windows. Share. Yeah, today was a good day in oil. Anyone took that sell?
I don't have any trade today.
Okay, perfect. So I made it as simple as possible to explain to you guys. So if you guys saw the chat this morning, I was showing you an area that I wanted to trade, right? So I'll go back to this again. This is what I sent a book on the chat. Yeah, I sent a book on the chat yesterday, and then I'm sure it's a bit more confusing. So I wanted to come back and reiterate why those lines you see on my just what those lines you see on these areas. This is called a value area. This is called the market profile, right? I use this basically to find values, to find out where people are happy to trade for oil. I need those areas to create my trade. This is how I trade. I look for areas. So I draw lines on these areas to find my trades. So what I've done is I took some of them off, and I wanted to show you. Sometime I merge them together, right? I basically find out the value of oil. Like today, or let's do today at first, and I can put you look at today, right? Today oil has value right here and a value right there, right? I drew a yellow big line around this area. You see that, right? This is the area that oil wants to trade today, right? This value over here, value over there. Oil always wants to fill a gap. This is a gap here they're trying to fill. Do you see that? They just filled it. See? They fill that gap they left yesterday. It's filled now. So they will want to see if that gap will stick, that price will stick. If it sticks, it will stay here. If it doesn't stick, it will try to chase it down to further down to find a new happy place that oil wants to trade. So far so good. This is how I traded basically today. Today I was looking for how can I pick up oil today. So I went back to the few days before and I saw I drew a line on the I drew a line. Oh, 1 second. I drew a line on my previous composite that I traded for oil before. You see this one right here. Right, this one. Right. So I knew oil is this is a very nice composite, meaning like it's a very nice value where oil will want to trade. This is very perfect. Even anyone knows, even knows statistics, you know about called a bell curve. You know the bell curve is a nice symmetrical line like this, right? Right. All the values in this line in the middle is divided in two, and it makes about 70% of all the value of the trade. So any order you see going into this is where the oil is happy to trade. This is the same thing just backwards, right? Same thing backwards. All the trade of oil will go into 70% of all the trade of oil will go into this bell curve, right? I like it to be nice symmetrical. This one is not symmetrical. There's gaps here to be filled, right? It came back yesterday and filled up those gaps. It might take a couple of days, so he went back and he filled it up. So just all I look for, those areas of interest where I want to trade oil. So anytime it goes outside this line, I call it imbalance. So when the trade is inside, it will be basically, I will trade, if it doesn't, if it's balanced, I will sell here, bring it back here, I will buy here, I will sell there and bring it back there. If it breaks out that line and then retest and go up, I will buy. So far, so good, right? We have a perfect example of that today. So as today, this is today's trade. I took earlier when you guys was on there. I took this trade where if you look at oil today, look at that balance. It came and touched this area. Same thing I explained here. And I sold straight away. I did not even blink. I was waiting for that because it came before earlier today on overnight session, touched it, right? And then dropped tremendously. Came back again, touched it again, and huge drop. This is what's my target, right? This is the same target I showed you guys on the chart today. So it's same one. Those areas, those levels is so important, right? See? Same area I drew. Look at that. So important to understand the contextual area that you want to trade. So I drew this morning because this is what happened yesterday with oil. I wasn't happy with it because it had two distribution. It had values here and value there. So I was like, what do I want to do here? Is it going to fill this gap and then continue down, or is it going to fill this gap and continue up? So I wasn't sure. But then I had a node. I basically, normally I don't merge it, but I didn't have any area to trade. I don't like it like this. I like it to be nice, symmetrical for me to trade. So normally I don't take a trade, but I had other things I looked for. I looked at the order flow, which is here. It shows that the order flow was negative, right below the neutral zone here, right? Oil hasn't been able to break that all day. That gave me a conviction that it won't break it. And it came around that area. It showed me a little divergence, a micro divergence. See, like here, it's called market participants, right? There were huge people participating in the market here, and then suddenly they all left. All the buyers left. So I was happy to sell here and then bring it down. So we call this a balanced market. It means that the standard distribution is nice and standard. So I don't trade the breakout. I trade just the balance of the trade. So it goes in, it goes up, it goes in, it goes down. So I fade here and I fade there. I'm happy to do that because it shows you have all the you got all the conceptual areas to trade. See my yellow line here. I wanted to enter here, but I had another line that I drew previously that didn't break. So it showed me a market condition here and a market condition here. So we call that rhythm of the market. So I can take, if I was trading the Asian market last night, I would take in that trade. Right? It came up, touched my line of interest, which is what I just showed you guys here, and it went straight down and hit my profit target. Right? I say, okay, fine, I missed that one. So if it comes back again and then don't break it, it took people stop loss right here because I can see like it's like nice week there. It took some people stop loss because people will put the enter here and put the stop loss very close to it just to make sure it doesn't just to make sure that if it decides to break through, they don't get trapped into it. And then this is a holy grail of everything. So I looked at the order flow. I mean, the dome. This guy always asked me about what the dome is. This one showed me this is where the sellers are, and then the buyers selling. I looked at it here. The speed when it was arriving towards that, we call it value area high, right? Was slowing down as it reached there, right? It was very fast and started to slow down. It gave me a conviction that it wasn't going to break. So I just entered my trade there. See, boom, boom, I've entered. It came back. And then it came back. And then it retested that area, another area that I drew earlier. I took another sell. It came back, took another sell, right? And I drove that sell all the way down. I had a target profit to this line right here, which is called my VWAP. But I was like, you know what? It's a very strong, powerful move because the speed of the dome was going very fast. So I just moved my target further down and I just came out right here. You see that? So I sold 1, 2, 3, 4, 5, 6, 7, 8. So that's if you were trading on the futures, about 300 contracts. So if you calculate that by 25 pounds, you would have had a good day with oil today. So 300 ticks on 25. about 7,500 if you're done that in futures. But I did it in forex because I don't really want to give my money to margins, right? So very simple. And the people yesterday, and also I don't really use a footprint because that's why I call it footprint. All those candles that you see there, these are their footprints. So it shows you what is the size that the buyer is bought, and what is the size the seller sold. Does that make sense so far? So if you let me just know. All right. So yeah, this is a footprint. It's just basically when you look on the chart, you're missing that one step. You only see those blue line here. I see basically every order that goes in there. I can see when someone gets trapped because it would be like a huge. This line would be huge, right? This delta would be, for example, if I wanted to know the buyers are getting trapped here, right? Yes, see, this one is no one is there. Right, look, no sellers, right? No buyers, sorry. You see that it went up and then no buyers. And then it came back here. People would have sold there, would have been like, oh my gosh, I'm stuck. Right, look at that. Now the buyers are coming back in and taking them all out. If you were selling that to bring it back down, you'd be trapped. You have to sell your position to come out of it. This is gonna go huge and keep going up. That's why I use it for, to just finding who's been trapped in the market. Because I know that how this is small, right? Look at huge orders there, but this tiny change here. And this one, the minimum delta is also 1, meaning that someone is absorbing all the sell orders. That's how I do the overview for trading oil. It's not complicated when you understand exactly what you're seeing. It's you just trade. I just trade consistent areas. I just trade where it goes up, where it goes down. I come in the morning. So let's say let me take it off so you can see exactly what I've done. So I erased this, right? So I came in this morning. Yesterday, this is what happened yesterday yesterday was Wednesday, right? Sold. What's my long-term view? What the investors are looking? They were buying before, now they're selling. So my bias today is sell. I'm looking for sales only. Right. Yesterday, I didn't have any good area for trading today. So normally, like I said, I wanted to have a nice V shape here with all these areas filled to show me exactly I can take trade there, because it means that I can just draw my lines here. I can fade it there. I can fade it there. I can fade it there. I'm quite happy to do that. And but it wasn't. The market is human, right? People will do whatever they want. But what I learned is it's called unfinished auction. Unfinished auction, it just means that there was only one person buying. You know, when you go to an auction, someone is just buying all the orders, right? But no one's selling. And then suddenly, everybody just jump in. I'll buy. So it was only one side who was taking all the orders. This is why you see those gaps there, right? So the market will all want to fill those gaps. This is what I learned. This is what I've been looking for a few days. The past few months, I've just been realizing like all it does is just come in and fill in those gaps. You see this? It left, it went in balance, right? And it came back and filled that gap. Look at that. Boom, it filled this gap. So how will I trade that? I will notice that it's coming back towards that gap. I would just trade it. I will literally just put my line there and then break out, pull back, and then trade it to it fill this gap. I've been practicing that for a few days. I started noticing it's still happening. And there's also this gap here. This was a massive gap. The market don't like gaps. So my intuition is it's gonna come back in, fill up those little. It tried to fill up over here, but it wasn't enough. Let's try again here, but it wasn't. The market refused that. Let's try to come back towards that area again. This is why I drew my line there. You see my nice black line there. I'm happy to trade this all the way back to the end of year, but I like to stop. I don't like to stay in the trade too long. So I probably just want to take short profit from here, retest that one, take a profit there, retest that one, take a profit there, right? But before you do that, it's going to take out weak hands. So people that don't have the conviction that the payment will go back down. It's going to come in, drive in, take people stop loss, come back in, take people stop loss, come back in. Right. So I know I've been talking a lot. So you probably wonder how this thing get formed. It's called tick chart. So it's right here. So one tick, every time 3 ticks happen in the market, it creates a line. So this one is, it might just be a variation of how many trades have been happening on that area. So it might actually, it shows exactly what you see there and what you see on the dome, which is the dome is that one there. Dome, right? So the dome is basically the replication of all the orders that happen in the market. You see that? It's right here. It just replicated on the chart so you can see it better. Because the dome one is nice, but you want to see it nice. So I can draw my line on the dome. People that trade the dome is quite cool. They do like this. They found out where there's a big value area. They go like this. And then every time you fade that, they just buy this. They buy here. And then when you come back here, they sell here. Right. And then just the point of control is where the most orders have happened. They draw a line there. Yeah, but they can visualize that. See, it just came there and it keep going up. So it means there's going to be imbalance up. It's all it does all day long. Look at that, huge buys, huge. Right, so I explained to you my overview of how I trade today. So you guys, I leave you guys to come off the mute, ask me a question, and I'll explain to you something else. So whoever wants, just come off a mute and then ask question, ask away. Oh, then you don't have any questions. Where are the people in the chat?
Eric, can you hear me?
Yeah, okay, yeah, go ahead.
Yeah, if one wants to start from scratch, I was looking at this Sierra chart and even NinjaTrader yesterday.
Yeah.
One wants to start from scratch. What would we have? Is there a way of if you could show it, like how it would look like, and do you have to add anything to get this screen, or as you've got these bars?
Yeah, so the bars is quite easy to do. You just need to create a format. So we can always create the format, but you have to understand why you're trading those. The difference between trading a break and trend line is because this is auction market theory. So I send you guys the book on market profile. You have to understand what auction market theory is. It just means that the price is, it means like what's the easier way to make you guys understand it? Because I understand in my mind, but I want to find a way to tell you, all right, this is what it's going to do. 1 sec. I wrote it down yesterday because I wanted to explain to you guys what that means. Because you need to understand what caused the price to shift, right? So you might know how to draw this line. It becomes an indicator, right? If you use that as an indicator, I guarantee you will lose your money every day. Because you use that as an indicator, but you're not reading the context of what's going on. Like me, if I didn't know anything, I would have drew my line to, like, I would have came in this morning. I would have like, all right, good. Someone told me to just draw. Someone just come in and draw a line. Where that's someone just come in. Oh, okay. Every time you see a market profile, you draw a line, right? Boom, and just trade that line. So you would have done that. You would have missed the short because it didn't get to that line, right? So yeah, if you understand the auction market theory, what happened in an auction in the financial market, then you can trade that. Because I can show you how to do it, but I don't want you to use it as an indicator. I guarantee you, if you want to use an indicator, you might just use Forex or use Fibonacci's or using what's that thing they call it again, like trend lines or RSI, all these things. But you can learn this. It's not. It take a while to learn, but after it starts making sense, then it becomes easy. Like I can literally just read what's going on in the market now before anything can happen. I don't even care about the news because it reflects everything that happens in the market because you're filling up gaps. People were, oh, the news said this, the news say that, but if you look at it, you do what you want to do because of the areas they want value from. So, for example, if that's what I want to do at this time. Look at the volume; it's a huge volume, right? So it's still going in. It has a gap to fill there. You see, it's going towards the area. So you can learn that. I can send there's a file. I can send you this template. You can add it on your stereo chart. But if you don't understand that the template will look like just like colors. So understanding what you do with a market profile will give you an indication how you can trade it. This is the only thing I learned first. I basically learned this, and it took me a while to learn it because I kept making mistakes because I was always more concerned about just trading the areas. But I never took time to actually see what the market is telling me. So you can learn it. You just have to understand the theory behind it, which is down that book I've sent it. Just you don't need to read everything because if you've done trading before, you only want to learn about why these things can form, right? If you understand what these things can form, you can trade these areas. Yeah. So, and also depends on your background. You don't only Forex, right? So I assume you've never seen this before.
No, I've never seen this before. I've always used the, I mentioned yesterday, I've always used the EMA crossovers, RSI, and volumes. I've always used those to trade.
Yeah.
And
yeah, this is a different ball game. This is this it works well with oil because oil has a lot of volume. It does work well, and oil is the orderly market. That's why I like to trade oil. It's the orderly market. It does exactly what it's supposed to do. It's not a random. It doesn't do anything randomly, right? If you look at this for the past few months, I didn't cherry pick those trades. I've traded today, and I show you those are my trades I've took today. It wasn't cherry pick. It basically it does exactly what it's supposed to do. Even if you go far back to a few days, it does that every time. It is always filling up those gaps. Right, it's gonna come up and fill any gaps there. So there's gaps there. It comes in and fill it up, and then keep continue. So what a gap does is they want to see the people are happy with that value. If that value is not enough anymore, it's all your cheap here, right? You say, oh, it's too cheap here. Let's go buy a year. Let's go test a year. Is it cheap there? It's still cheap. Let's go further up, right? Then here, I love this area because it's merged between at least, this is almost 9 days. Oh, you love this area. That's why yesterday when it was selling, I was worried. I was scared to sell until that line come because it's huge. But I've seen this gap here. So when I came in towards me, right? So I was like, I came off here. I didn't stay. I closed my position there, but then he went in. So he went imbalance, and he went balance in there. See that? So he went imbalance, and then he just went balance there. He stayed there for a while, right? On the next day, and then people were like, let's test the next area, right? They test the next area, boom, and then when they tested it out, and then it's like, okay, the price works, and go down. So if I was to trade today, will I be long or short? There's nothing telling you to be long today. Literally, like, I wouldn't be long yet. But look at this now. This is what I was telling you about. What do you mean about order flow? This is the order flow, right? So this 0 here means it's a neutral area. It means that if oil can break this one, it will be a positive inventory. But I think he already reached his target for today, because you see the volume is just keep going down and down and down. But if it breaks that, it's going to kind of test that 7270 right here. But I don't like trading long. I like to trade short. I took this trade taking less than 7 minutes because it was so much value just flew there. I don't like to stay there long. It depends. What is your trading terms? Do you like to be on the long term or short terms?
Oh, I try and do day trading.
Yeah, this is perfect for day trading because you enter a position, you know what you can come out, and then I just put my stop loss behind the next market condition. Do you see these lines here? Maybe I have a different way to show that actually. Let's see. Yeah, it's more. This is more. So I put. You see those? It's too much colors. I don't know why I do that. You see these colors there. Like when I traded, if I entered, this is all this line there. It's called a band. The standard deviation. This dispersion to the mean. If you understand what in statistics it means, that all this inside here is the volatility of the market. The spread of the spread of those bands means that there's higher volatility. When it's too tight, it means that the market is very balanced. You're just gonna go like this, 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 right? You want the market to this band to expand more. So if I enter on one band, I put my stop loss on the next band. As a daytime trader, you never want to have expose yourself too much, right? So this is maybe a 2 to 1 ratio right here. But if it breaks that line and keep going, I'll just load extra trades in there, right? And I will close when even before my target, or if I see some conviction that the market will keep going down. So every day is not the same, right? It changes so much because all human behavior, the market will do what it wants to do, right? If someone wants to fill up an order at any price, it will just buy. Doesn't care what is any breaks, there's any point of control, that they just buy it and they don't care. The bank can do that. They can just hedge their position with something else. So you have to be worried about that part too, because you might be like, oh, this is a beautiful trade, and you enter that you get taken out. You just have to move on.
Hey, can you hear me?
Yeah, I can hear you, yeah.
Okay, and this is Dominic speaking, one of the friends of Eric. I noticed that most of you guys don't quite understand the chart is using it. For me, for people who never trade on CR, who never done this kind of chart before, I would suggest like you use TradingView. You use TradingView to learn the volume profile. You learn how to process volume profile, the market structure. And when you come back to this chart, and when Eric explained you, the book he sent on the group last time, if you read that book, and when you come back to this chart, you start understanding, it will make sense, everything is being explained so far. Some of the people, I feel like they find it confusing, but if you understand the process of the market structure, market profile, and when you come back to this chart, you go through the explanation again, everything will make sense. That will be more clear for you. Because most of the things that's happening, you guys don't get it because there's a background that you need to know. How the market profile
there's a gap, yeah.
Yeah, so that's those things that you need to find out. You need to know basically in order to better understand it. And
that's
for my guesses, on the ladder he's trading with, for new beginners, I can't suggest anybody who never trade with start trading with the ladder for now. The reason being is you're not only looking at the ladder to enter the trade. So the whole process is show you guys that process is happening before starting looking at the ladder. So the best thing is first understand the process, understand the UCI you're using, like the market profile, the different price structure, market structure. Then when you start understanding all those things, the ladder is a top up. So it's a last gap. So once you understand everything, you add the ladder, you become more precise. So you're not only looking at the chart, you're also looking at the price underneath, what's happening underneath the candlestick. So you become more and more precise as the time goes. So that's a bit my observation.
Yes, no, that's correct. This is what this is just an overview. Basically, yes, you can use the volume profile and then the market profile on TradingView, right? So then if you want to do that on one-to-one basis, then you can message me and then you can get that, and then we can work on towards do that, or we can do a boot camp, and all you guys are interested, we can sort it out, and then we can do a 1-week boot camp or 2-week boot camps, how to use market profile and volume profile on TradingView before you head to Sierra, because those are just fundamentals, right? But the aim is to learn in the option market theory. If you can put that, you can use it on anyone. You can go on TradingView and use the same thing, Dominique uses that on TradingView, and he's doing well with it because he understands the structure. So you don't need Sierra to do that. I prefer Sierra because I started with Sierra. I didn't learn anything else. But I can go in TradingView, I can replicate the same charts, and I still will understand what I'm looking for, right? All you want to learn is how can you find your level of trading, right? And then if you're disciplined, you just know that I wanted to break out from that. I want to break out from that one area. I want to break from that area and trade it, right? As you get advanced, you can start thinking like, all right, like I'm a bit advanced. I've done this so many times. I spend thousands of hours on the stream to see these things. But you, as a learner, when I started, I was just doing it more as an indicator. I was just like draw my line, spend my day watching it, and wait for it to break out, pull back, and I buy, and I wait for my target to reach, right? So I became more advanced because I've been seeing so many times, seeing what the oil does all the time. So I'm able to see exactly what he's trying to achieve, and then take that trade. See, just now look at that. Same level he hits again. He hasn't break. He didn't break it. He might just come straight back down again. Test this area. If he's happy to go, it will just continue. Right? See, came back here, failed to break, but it might just come back down. I drew that level. It wasn't on the chart. I saw this level a while before, and I just drew that because of my understanding of the volume profile and market profile. So I was thinking about that. We could do a boot camp. People that are interested, I'll get like 10 people that want to do it. You do your trade on a profile on TradingView, and then you do a video of it and you send it back to me, and then I can tell you if you're doing it right or you're doing it wrong. Any other questions? Is it going down? So you see, while you use the DOM for, I just use the DOM to just see, is there going to be speed going down there? So this one can come after when you know exactly, because if you stay here, you lose your money. I done that, I try it. The algorithm will just take you out because they're so fast. They just trade on it. They'll come in and spoof you and everything. They come in and just spoof you, but look at that. It hit my line again, like we discussed earlier. Same line again, see? 1, 2, 3, because the market is balanced today. It's not going anywhere. Look at that. Huge. If I enter there, I would have just came off. You would have just I would just lower it right to there. But I would be concerned because there's no buyers. See, there's no buyers. For this to work, you want buyers and sellers buying and selling at different prices. See, so now the buyers are coming in. So I'll be concerned, but this will come with time, right? So don't feel like you can't learn this. I thought I couldn't learn it, then I learned it. So what we're gonna do is we do a poll, and then people that want to do it in a bootcamp on TradingView, we get TradingView is free, I think, and then we can start from there. I only have 4 things. I only have like 5 minutes left there. Crazy. You can speak so much things there and then forget. Right, guys. Anybody else has any questions? If not, just come off the Zoom if it ends and just come back in because we only have like 5 minutes. So don't be shy. You can send me a message on the chat if you want.
Eric, I don't have a question, but thank you for arranging it. It's something new and it looks interesting.
I know it looks weird, right? It makes you wonder. Look at that. Look at this, right? Look, it makes you wonder. Look, it hit that same spot, right? You will not see this anywhere else. Like you see, look, huge orders coming in, 30 lots, 30 contracts sold, right? I could just sit there all day and sell it. I told you guys, right? I wasn't making this up. It happened. Same thing we just spoke about a few seconds ago. Look at that. Same thing I just said a few seconds ago. You're gonna test this area. All right, test this area, yeah, because this is where the point of control means where the most orders has happened today. So you're gonna test that area. So if it breaks it, it was gonna come back again, back to where it's supposed to be. All right, so you're gonna start to slow down because what people see that all the traders are seeing that what's gonna happen here. But look, the more sellers in the market on at the moment, but which scares me because what I want to see buyers on the side too and sell at the same time because they need to absorb those prices. You need to be, for something to move, one person needs to be buying, one person needs to be selling. So yeah, there was no buyers, right? I can see that if there's no buyers, it could be an indication that someone is buying every or selling every order and it can fly up and take everybody's sell. But again, you have to, with time, you start understanding it. But I'm not scared because someone bought 30 contracts of oil. See, boom, it broke through. I see that it changed the condition. So I drew that line, right? See, there you go. So this was the area I was scared about, and it went straight to it. And then it's going to stop again here to the weighted average of the price. You might think about it again and just come back here again and test it all day long. You would just go up, down, up, down, up, down. Smart people just sell, yeah, buy ear. You can literally make your money just doing that all day long. Sell here, buy here, right? Stop loss minimum, very tiny stop loss. If you take your while, you can come back in because you know that was a stop hunt. All right, so it's contextual. You learn this by doing a lot of spending more time. Look at that. We spoke about it, right? I didn't make this up. This is live. This is happening right now. I didn't go back to a few days and I found this and I showed you guys. This is happening right now. It's happening right now. Look, huge sales. There's a big order here. So they're filling up their orders. 13. So everybody's out. People are selling at 2, are buying at 211. But people are, look at that. Boom, go down. This is my point of control for before. So look at that. Boom, boom, boom. The old me would have been selling all day long, but I decided to start just taking a few trades and I'm done. I used to be like in the market every 10 seconds because I just see it so many times. So I'm like, oh, it happened, I'm going again. Oh, it happened, I'm going again. Then you break your average because sometimes you won't do that and you end up like, oh, I'm stuck in. Look at that. No one is buying here. But this is why I was telling you about the VWAP. So if you have this on TradingView, you can trade it on TradingView. See, it touched there and then it stopped. But look, my order flow show me strong sellers are in the market, right? It refused to go positive. This is what I told you, right? If it breaks this area, you're going to be positive inventory. You didn't break it. You haven't broken it for a few days. So the algorithm is want to sell right here. It literally will be selling. Look at that. All few days, it hasn't broken the area. So it's negative. People want to sell oil. They don't want to buy, right? They don't want the inventory to go positive. See, huge. See, no buyers, no blue candles. It's gonna come and test that 2,500 inventory again. And it might just come back again, not go too far, and then break that 2,500, go further down, right? It has a gap to fill further down. It's gonna look into do that. Or you could just come here and get definitely out and go back up, right? Doing the same thing we spoke about earlier. I couldn't find any better example to show you guys how option market theory works. Value areas is where all people are happy to trade here. It's gonna be huge volume here. Here might be small volume. If you break this area, it's gonna go straight down because no one is interested in selling here. No one's there to buy there. They will just sell. I can wait for this to continue. If I wanted to take a trade, if I was eager, I'll wait for it to come here, pull back, and I would just sell all the way to here. So there's no value there. No one is selling there at this area. So it will just flow through straight down. Because that's the point of control. If it breaks that, it means that they don't care about this price